Otsukimi here. Who else would it be? This is Observations with Otsu, covering weekly analysis for Bitcoin, Ethereum, Solana, and whatever else we can get to for the week. So, a few apologies. One, I'm kind of sick. Two, kind of having a lot of things going on around the house as far as some, not emergencies, but more prominent things, especially with the market kind of just flopping over. I got some things to attend to, so this will be a pretty short video overall. In addition, you might hear me clear my throat, and I'll try to mute it going further. But I am feeling a little sick, it seems like. So it iced over here as well over the weekend. So not exactly good conditions overall in my crypto and non-crypto life. So we'll kind of get started. There's no real preliminaries. There's no theme per se. I usually have a theme that accompanies this. And the only thing that really is going on is the whole BlackRock ordeal. A lot of people are throwing Jim Cramer into this. There's some ordinal stuff like that, and like, the sometimes the best theme is no theme. I think a lot of people are trying to get too involved with this BlackRock thing. You know, is it a big deal? Well, it's no small deal. I think that's pretty clear. But also too, I think a lot of people are too worried and concerned about this. It's like the market's going down because you thought the market was going to go down, so then it went down before it went down. So it's like a lot of these people are self-fulfilling their own prophecies, and that's pretty much the damage that gets done when it comes to the Fed meetings and things like that too. Um, with like the FOTC or whatever. That's not the word. I don't know. The meetings that we had like a year and a half ago that nobody remembers, but everybody was attacking you for not paying attention. And so that's the same thing. Like people are changing from the ETF to something else. Are these are these small things? No, they're not. These Fed meetings are important. The ETF thing is important. Everything is important. So I get that. At the same time, do not let it be your primary way to trade. And I still see this, and it gets so tiring after 7 years too. I see this a lot, where one of the biggest problems people have with trading is themselves. It's themselves. The biggest factor that leads to bad trading is human error. Human error. The markets will tell you generally, in most cases, the markets will give you a general idea where to go. Even, and again, I keep emphasizing this, and I keep getting this thrown off. I've mentioned this in videos sprinkled around for at least 2 years now. How like the 200 EMA trend is a perfect way to analyze the macro trend, and nobody really wants to acknowledge that in the crypto world. People do in the legacy world. Well, it's the same thing in some ways. In most cases, it is. But anyway, I want to emphasize that a lot of people will enter a trade and sometimes they based off emotions, but they'll certainly try to exit a trade based off like, what if it happens this? What if this? What if this? What if this? And so like if you're into a trade and you see something like the BlackRock, well, I got to get out. And sometimes that's right. Like today would have been right. You would have gotten dumped on. But for most cases, it becomes a psychological battle between you and yourself. And so that's really the only thing I have to say thematically about everything is that I can't emphasize enough to try to stick to a rule plan, document your trades, calculate conditions for entry, calculate conditions for stop losses, calculate conditions for take profits, and calculate positions for risk management. Those four things, okay? And then do not, absolutely do not go outside the bounds of those rules and conditions that you made for yourself. Okay? You can have exceptions, but make sure they are exceptions because some people will will get out of a trade emotionally or make a trade emotionally, and the worst thing that can happen is that someone trades emotionally, like they buy something out of emotion and they make a lot of money off that because now they're going to condition themselves to run off their emotion, and sometimes that's fine. We talked about market psychology yesterday in the Discord. So there is a place for that, but the application doesn't apply across the board. And so when it comes to day-to-day trading, um, if you start trading based off your emotions, you're going to start relying on those emotions, and your emotions can be wrong. Okay, like I'm having a pretty bad morning myself with my disabled son. Okay, and I've got a mixed bag of emotions, and I know a lot of those are wrong. Okay, a lot of them stem from being justified, and a lot of them don't. Okay, and that's very hard. Not to get onto that. I'm not trying to get onto that sector, but being a parent is hard if you are not a parent. But being a parent of special needs child is extremely relentless, and it's you can't use the solutions that you could with normal children, and so that leads to a more of a buildup for me. Things like I don't get into it. So, but the thing is, you have a mix of emotions and not all of them are correct. And so that applies to the trading world as well. So just keep that in mind overall. So in my experience for trading, um, having those conditions and rules for entries, take profits, stop losses, risk management, and abiding by those helps tremendously. Okay. And the thing is, if you start to make those rules, let's say you get those rules and conditions and then you start doing them for the next 2 months and then you actually do bad. That's that's not necessarily saying that the method is bad. So that's the thing, you got to get used to a new system. That's the hardest thing that for me, and I do try to relate this to playing an instrument. Like when you first try to play an instrument, you're going to sound really bad, and that's just how it is. You just have to practice. And so that's the thing, like a lot of people are used to trading emotionally and not mathematically. But the thing is, you remember the biggest wins, you remember the biggest losses, you remember your failures, you remember things differently. And I'm not saying wrongly. I'm not saying you remember things wrongly, but you remember things differently than how they go if you would have documented all your trades and say, okay, I didn't do as, I did 100 trades and guess what? I didn't do as bad as I thought I did. Or maybe I didn't do as good as I thought I did. Or you see these 100 trades and be like, okay, I like this particular trade, but it's not very effective. Maybe I could take that out. And so that's how that works. And that's honestly why journaling your trades is so important, because you can see your 100 trades, see like, well, what happened here, and there's usually a common denominator for me at least. So, and then if that common denominator leads to wins, I keep that. If they lead to losses, I take it out. So that's how I got my system. A lot of you guys, especially in the Discord, I'm talking to you guys in particular, like a lot of you guys talk about my system, and yeah, and that's the Apex system, which I talk about. It's not like an official branded system per se. That's just what I call the Academy. But my system, I'm very rigorous, and some of my rules, like one of the biggest rules, I think a lot of people have. I don't think nobody criticizes it. I'm pretty sure nobody criticizes it. I think I'm pretty well respected with my method, but I think the thing that people can't quite understand is I do everything at market close. Everything. I don't do anything while the candle is still open. And that's my entries. All my entries are at market close. All of them. And you're like, Otsu, well, doesn't that, yeah, that does, that does cause problems. It does. But it also causes and creates solutions. And it depends how I want to view that. And so the problem that you can have with you know, um, market closes that you don't always get the best entry, but those type of trades I don't look for anyway. So that's see how I get rid of that problem. I don't really focus on those types of trades. So so that's the thing, and that goes the same with stop losses as well. Like I don't when I close a trade, if it wicks below my stop loss, it's not a sold trade. I don't do limit orders. I do market orders. Okay. Some of the best traders I know do market orders. Some of the best I know do limits as well. But and that's the thing. A lot of these, um, you a lot of these trades have a certain method to them. I've looked at these over the years. I've refined them over the years, And so it can lead to questions if someone else is not familiar with them. That's completely fine. So, but just know that's something that I took about 2 years to master. Okay. So when I traded stocks completely differently. So I can't treat them the same way I treat crypto. So I started my crypto journey 2017. I tried to trade crypto like I traded stocks. Didn't work. It worked a little bit. Trading crypto like stocks helped me the way I trade stocks very differently. And they did help me get home runs. And so that was good. And it was a good time to get home runs. It was 2017. But that failed significantly in 2018 and half of 2019. So it didn't always apply. I had to readjust my strategy. Aaron came into the mix that helped me learn a little bit. I made a decent amount of money in the next cycle that led after the COVID drop. Didn't make as much as I wanted, but I still made enough to be satisfied. Um, and then I had that's about the same time where I started to perfect my system. My system became pretty solid pretty much in 2000, late 2020, I'd say, because the COVID pandemic did kind of help me look, what like most people, help you look at a new perspective, try to focus on trading, and so that helped with that. So it will take probably 2 years to get right, and that sucks for. I know that that sounds bad for some of you that are just starting off, that think, oh, I gotta wait another 2 years. Probably. Will the market look the same? No. So it's going to be different. I can't really help you. I know I'm creating more problems for you than answers. Um, but that's pretty much the only thing I can do as far as actively trading like this. You can do other methods. You can do NFT. I mean, it's not the worst time to just kind of like, you know, blindly long trade. Not like right now, but like every month for the next 18 months will probably be a little bit decent to do, to buy risky trades like ordinals. Ordinals are probably gonna go up. I think we all can understand that. So it just depends on how that operates. But as far as like actual trading in the trenches like this, it'd probably take a minimum of 2 years, in my opinion. So and and again, I'm not saying that this is I'm by no means the definitive rule on this, but someone that has finance experience, someone that I am educated. Like I have, I have 2 degrees, things like that. Like I'm not like a pushover as far as like as far as education goes. So I kind of know the terms and everything like that. So I'm not saying you do or you don't, or even if that matters. I'm just saying that's my background, and your background may be differently, and that may cause you to accelerate, and that may cause you to be set back just a bit, and that's completely okay. So, anyway, I rambled a little bit too long on that, but just be careful with the trading. We look at something like this. We look at the big red day, and this is something I looked at in Discord yesterday. Um, and it's something that I really want to emphasize. If you get anything from this video with any of this, it's that I looked at the markets to let me know that we were going to have a red day today, possibly. Okay, I didn't look at BlackRock. I didn't look at any of these other things. I looked at the market. I looked at the technical analysis. Okay, with Bitcoin in particular, I looked at this. Where am I at here? It's not clicking here. There we go. I looked at right here. This is what I see. So we had a liquidity channel. This is what I call it. We had a push up and then we had a push back below. Once we push back below, it usually sends down lower. And so that's a pattern that I've recognized over time. I call that a deviation. This is a deviation pattern. That's what I look at. And then once we went this line below here, that was also a bearish breaker. And so when you have a deviation bearish breaker, we tend to get a sell off like that. And so that's why I looked at that. Sometimes I'm wrong, of course. Absolutely. But I did not even know the BlackRock thing was a thing until this morning. So you don't have to look at those things to try to gauge the markets. Okay. So anyway, in most cases, it, there's enough cases where TA works by itself so much to where you can be self-sufficient on just TA, in my opinion. My very, 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 very strong educated opinion with experience. So, again, everybody works differently. If it's profitable for you, go for it. But I have no problem with that. I want you to make money. I do. And so you can work that out as you need. So that's the introduction, I guess, preliminaries, whatever. I do have Nowhere Premium. You guys can check that out. It's $20 a month right now. Doing lots of private videos for that. We did the small cap for about 6x yesterday, so that was pretty good. And I posted the results on Twitter actually, and so we have that. We do about 10 minutes of video every day, focusing on charts and markets and coins. We got a special video coming up about portfolio management. Lots of charts, discussions. We actually even talked about making a node. So we just discussion for now, but yeah, I would love to have you there if you're interested. I also have Aaron scripts there. That is on the WOMP dashboard. I'll put a link in all this stuff. I'll put a link in the description. That's a one time or it's a one time fee or for a monthly option for the next 4 months. So you can do that as well. And so if you're interested, I won't talk too much about them today because I'm already starting to feel a little ill and tired. But if you're interested, go ahead and check those out. So let's go ahead and get started. We will do Bitcoin starting on the weekly. All right, we're going to go to Bitcoin first. We got the weekly time frame coming up. All right, so we're going to take a look at this here. I'll probably just leave this up for context. But last week, so we'll look at last week first. We pretty much had a Darth Maul candle going to the downside. So pretty much a non-event. And sometimes that tends to happen when we get a big move like this. But I want to talk about this in particular before the recent down move for today. Because in one sense, I did kind of expect that we were going to have a red day today, as I mentioned in Discord. But I also want to emphasize that that tends to be the case. You know, the term Bloody Monday used to be a big phrase, or basically the first day is usually a red day. And so looking at this, generally we have a wick to both sides on every candle. So we could be going up here relatively later into the week. And so that is what it is. But as far as this whole weekly structure, we had a big push up here. We had a good rejection, but we still held this high. So we made a new high roughly at like 44,000, rounding up. Then we had a pretty big push up that was 2 to 3 times bigger than that, 2.5 times bigger than that. And then we actually pushed downside to where the down target was lower than the previous entry. And I want to emphasize how insanely bearish that is. A lot of you don't seem to understand that. And I don't mean a lot of you as maybe you listening. I mean, a lot of people on Twitter don't really understand um, how how big of a deal that is. So not only was that a rejection for that current candle, but it's also a rejection of the entire range and for the entire time frame. So it's one of those things like we will very unlikely move past this, anytime soon. And when I say soon, I mean the next couple weeks. I'm pretty sold on the fact that we have topped out until April. I believe that. I believe that. And so when I say topped out, I mean we won't go above 50,000. I'm talking about the highs, not to the candles. A lot of people, the thing is a lot of people are afraid to get too, or they want to stay nuanced so that they can be right either way. So it's like, oh, I'll give you an up option and a down option, and then whatever one's right, I'm going to pick that one, and I'll delete the other one. I don't I don't do that for one, and two, I don't really care either because you you are going to be wrong. This is just your analysis is your perception on the market, and your perceptions can be wrong. And so there's crypto Twitter is a really weird beast, and I really wish the phrase would just go away because a lot of people criticized like crypto Twitter is becoming more of a niche every year, and eventually it'll become irrelevant, and that's actually going to be a good thing as far as the maturity of crypto is concerned. But also, um, it also be a good thing because there might be less scammers too. I don't know. I'm not going to go there. But the thing is, the structure is bearish, and I'm not. I'm not afraid to say that we won't get a new high until April. I don't think that's unreasonable to say. I did something similar up here in this range, but that's another story. There is evidence to suggest that we will do that. So like on the weekly, we did reach. I try to look at 85% on the RSI as a target. We got to about 84, and so we did make a new high here, like I said earlier in this video, so just barely made a new high, but we had a pretty significant lower high in the RSI. So this is a weekly divergence. A lot of you guys will disagree with me on this. I'm okay with that. I'm used to disagreements. And I'm not here to say like I'm right, blah blah blah. The thing is, I've done this for a while now, where I look at divergences mathematically instead of, well, they look divergent. Because if I do this, well, okay, it looks a little more divergent, right? But you're gonna tell me, well, Otsu, you just adjusted the chart. Well, yeah, that's the point. That's like you're telling me that based off how it looks is the way that it should go, and that's by default, the RSI doesn't work that way. By default, price action doesn't work that way. Price candles are mathematical candles. RSI is a mathematical indicator. It gives inputs to give an output. Price action gives inputs to give an output. And so both of those together, if the outputs don't match each other, a divergence is there. I don't care how significant, I don't care if it's only 1%. It's still there. Now, we can argue whether that matters or not. I'm okay to have that discussion. What you can't argue about is that the divergence is mathematically there. Now, we can argue whether that 1% divergence is valid, and I'm open to have that discussion. I am. But in my experience, that has not mattered. In my experience, that has not mattered. So that's what I'm going to play with. We had this follow through to the downside. Darth Maul bearish candle, downside move again so far. I think we'll probably recover this, however. But we also have a very uh, wide bullish or a wide bearish consolidation. You can tell because we're in a bull trend right here, and we're forming a wedge. So when you get this triangle formation, that's the worst. That is the worst formation you could have as a bull. And so this signifies that bears aren't necessarily strong, but it's a sign that they cannot get any weaker. When the trend gets this low, that means the trend, the bearish trend is non-existent, basically. But what this is saying is it's so like I view this as like an airplane, like someone in an airplane and someone on the ground. Someone on the ground cannot fall to the ground more than depends how tall they are if they're standing up. So if they're standing up, they can fall 5, 6 feet, whatever, right? From their head to the ground, right? So if they're on the ground, I think we can all relatively agree the fall is minimal because they're already on the ground. Okay. But if someone's in an airplane and there is a chance that the airplane could crash, they have a much way to go, right? And so this is what that signifies. This signifies that the bears are already on the ground. They have nothing to lose as far as gravity is concerned. Bulls are in an airplane and they're going down. And so you just got that, and obviously the analogy stops there because I don't talk about crashes or nothing like that, but that's what that talks about. So this is showing that the the bull trend is weakening and the bear trend is staying low. And so that just means so that does equate to some downside move. That doesn't mean that this is bearish per se, but this does mean that the bulls are losing momentum significantly. And so when this tends to happen, when you get a wedge like this, we do tend to get a cross. And so this is an example right here of a bullish one where the bears lost momentum and then we went up. We had one more drop down, and then that was actually the end of that cycle. And so it's possible we could do the same. I'm not saying it's going to be that strong. Sometimes they're not that strong. Um, but we'll see how that goes. As far as the RSI is concerned, we're still healthy. And that's the thing. I don't think we're unhealthy here, but I do think, again, um, I think a lot of people are too bullish at the ETF, and I wasn't exactly bearish myself. We were going forward with it. It rejected, went neutral. I'm still kind of half neutral. I'm not taking too many shorts really. Another thing I want to look at here on the weekly is you have this consolidation structure. And this is one reason this top here is why I had 47,000 as a target. And so we actually rejected that on the weekly, and now we're here at the mid. And so that's one reason why we respected that the last week as well, is because we're here at the mid. So now we're dropping below. So now, if you are a bull, and if you're looking at the weekly here, you want this to stay up. You want this to be basically be a bullish candle by the end of the week. That's all you need. That's all you need. Now, if it fails, then I am flipping bearish, and then I'm looking for this 36, 37 target. It's very possible we could hit here at this inside breaker at about 38,000 first, I think, and that would match this stall area right here. And so the position that I'm looking at is something like this. And so this blue area right here on the bottom is where I'm looking at for a downward target, possibly sometime in February, or actually probably late February. I forgot this was the weekly chart. So um, that's what I'm looking at. I don't think that that's, I think that's pretty logical. I don't think that that's, stretching anything per se. I know people want to be bullish here. It's just not bullish, okay? And I'm not going to subscribe to that. Like I flipped bearish once we lost 60,000. Okay, I flipped bullish once we dropped here. Actually, I wasn't even bullish here at this point. I was already bullish here because I knew that that was almost a repeat of this COVID drop. Okay, and when we get black swans, and this is controversial, I know, but black swans are bullish events. They are not bearish ones. And so one reason why that's controversial is because some people view when somebody says the word bullish, or when some people say the word is bullish, they look at the current candle and they think that that's a good bullish candle. So for example, say we look at the replay and then we'll look at this right here. They'll see this candle and say, "Oh, that's bullish." Okay, I agree with that. But that doesn't mean so. But the thing is, when you tell me a candle is bullish and a formation is bullish, that doesn't mean that the next candle will also be bullish. Okay, and it's the same with bears. Like if you look at this candle and say, "Oh, that's bearish," yeah, I agree. I think that is bearish, but that's not how I'm perceiving that. Like you're telling me that the current candle is bearish, but what? But I don't care about the current candle. I care about the next 3 to 7 candles, and that's what Aaron does. By the way, Aaron lets me in on what's going to happen as far as higher probabilities. It's not accurate. It's not 100% accurate, but it does give me some insight. And so when I look at something like this, I don't think, all right, this is a bearish candle, we're going to go down. I think of, okay, what is this going to lead to? Exhausters or sellers were exhausted, things like that. So I'm like, okay, this is bullish to me. And so when I see a candle like this, I don't necessarily think bearish or bullish because I'm not looking at the current candle. Most people, when they say it's bullish or bearish, they look at the current candle. And so the wrong application is saying, okay, my favorite influencer said this is bullish, I'm going to buy. But that's wrong. Not just because you shouldn't be listening to influencers, but it's wrong because their interpretation is wrong on an educational level as well. They're telling you something is bullish, but you're interpreting that as this will continue to be bullish, and that is not correct. You should never interpret when somebody says this is bullish that this will continue to be so. And so that's the thing. It is a present tense. So when you talk about bullish and bearish wording, usually that's present tense. But when I think about it as future tense. And so it's more complicated than that, but that's the gist. So that's how I'm looking at that. So now let's go ahead and stop this replay, and then we'll look here. And so this here was making me think that we would get bearish price action. So far we have, and so this is the target that I'm looking at to kind of flip that around. I do think that we'll hit somewhere within the 36,000 to 38, let's say 38,000. Um, I'll just put it up there because I do think there's a chance that this could get front run, but about 38,000. I think somewhere around there. That's where I'm looking at for a price target. So let's go ahead and go on to the daily and we can see how this goes. I looked at this here in the Discord and I mentioned, in addition to all this, that we have a liquidity zone right here. And so I'm not interested in shorting Bitcoin because one, 38 to 36,000 isn't too far away. So we could, you know, I mean, the top of that is like 6% away. So that's not significant to me. That doesn't bear a short, at least on this time frame. But we also have the liquidity signals or the liquidity area in this top area in the blue, and so that means that the bounce rate could be higher because it's becoming a little more elastic for the short time frame, and so which means it could bounce. And so as far as that goes, I'm seeing something like this, kind of a crappy trend, but we rejected from each. I'll get rid of that because it's not important. It looks like so. Each time we went up, so we had up here, rejection, sharp rejection, consolidation, had a good uptrend right here for the couple days, rejection, big uptrend, fake out, strong rejection. So we're getting those strong rejection at this area, and honestly, really even here, but mainly here, we had strong rejections over uptrends, and that was probably your sign that this was a little more distributive than we wanted it to be. And so that's how that works. Now the good news is for the daily, we do have a bullish A-rim consolidation, which means we could see a bounce. Now we have not seen one just yet, and so what that also means is if once this 78 percentile in the bearish trend gets to 50, then we could start bouncing. And so what that could equate to is we could see the drop down to 38, and then that could quickly be bought up. And so that's what I'm looking at. And so with this consolidation in mind, I'm looking at a $36,700 target. And so if you try to long this, where am I at here? New computer, sorry. You might be able to notice the difference, but I had a client gift me this. So I could enter in roughly in this range, somewhere in this pocket would be good. I'd probably target the lows right here. So the closer I get to this, the better, but I don't want to get too close. So I think roughly about right around the 37,200 is pretty good. And the reason being is I think this is pretty significant. I don't think this is going to break. And then we could target the highs again. So you got a pretty good, almost 4R position at 25%. Now that may take a little while, and that's okay. But that's kind of what I'm looking at. That's what I'm being patient for and kind of analyzing that. So with that, that's kind of just what I see on the daily. I don't really go on the 4 hour too much on these videos anymore, but that's what I see. I think the structure looks good for that. And also too, I think this might lead into a reaccumulation period. So we'll see how that goes. But overall, and this might take a month to play out, that this long position. So just keep that in mind. I have no evidence to suggest that we are going to continue to run up significantly really fast. A lot of people get into that hopium because we have a bullish narrative, like things like BlackRock. Well, that's been nothing but bearish so far. So I don't know. And that's the thing. Like 2 weeks ago, everybody was saying all this stuff was bullish, and now everybody's like, "Oh, this is bearish. We got to keep going down." Just stop it. Just stop focusing and pay attention to that. At the end of the day, it's going to be you and the charts and your money. And all that is you, and the biggest common denominator is you, but the biggest margin of error is you as well. So don't make that more complicated, right? So let's go ahead and go to Ethereum. All right, so now we are going to look at Ethereum. And a little bit, some of the analysis with Bitcoin will transfer to Ethereum. Some of it will not. We'll just kind of get going into this. So the previous candle from last week, very similar in that regard. We had the bearish Darth Maul kind of evening star, whatever kind of thing. I don't really pay attention to all those patterns too much. In addition to that, we have the Abraham bearish consolidations forming. Had to take a quick break off screen, so I apologize. And so I kind of got to reframe this just a little bit. So we had the Darth Maul candle that we looked at. Got the Abraham bearish consolidation pretty wide, about as wide as you can get. We're kind of into our second uh, click or second candle, so to speak, out of 81%. So that's pretty ways the way to go if this plays out all the way. A lot of times it doesn't play all the way. So just keep that in mind. You could get something like this per se, and then that ended at like the 22 marker, and so that could happen as well. One of my concerns, however, in addition to that, is the bearish divergence that we have on the weekly, and so this is much more prominent in comparison to the Bitcoin one as well, which is kind of I'm disappointed. I'm disappointed in Ethereum. Like Ethereum, we need to talk because you've been consolidating, like Ethereum has been consolidating for a whole year, and now we have a weekly divergence. Like, come on. Like, this is not, like, the fact that this is divergent after a 1 year worth of consolidation is pretty bad, actually. It's pretty bad. So, now as far as the targets, I couldn't tell you as far as like long-term targets, like is Bitcoin going to 20,000? I don't think so. I already told you my thoughts about the 36, 38 marker with Ethereum. So far, this doesn't look very good, but that doesn't necessarily mean that it has to be bad. We have a hidden bullish consolidation, which usually means that we will chop instead. And so that's a lot of things that people don't consider is that we hidden bull divs do matter. A lot of people don't think it matters, but it does. But it just doesn't mean what you typically think. It goes back to what I said with at the end of the Bitcoin portion of this video, like bearish candles don't mean bearish price action. Bullish candles do not mean bullish price action. When somebody says things look bullish, what are they trying to say? They could be saying five different things. Okay. Same. And so that application that does even more damage when you start thinking about bullish divergences, bearish divergences. Not every bull div is going to go 30%. Not every bear div is going to go down 20%. Hidden bull divs can matter. They do matter, in my opinion. A lot of people don't think that they do because they don't analyze them enough for it to matter for them. And that's okay. You don't need to know that either. So that's how I see this. Big drop down so far this week. Keep in mind, we're still on the first day. Other than that, it's pretty crystal clear on the weekly, and Ethereum has been. And so we can kind of combine this structure here with the lows and then the high here, and that's kind of what we're looking at. I think the worst downward target we could see is like 2120, so that is the good thing. It isn't very, um, it isn't too much from now. It's like 10%, which is not as much as you think. I mean, today's down 3 or 4% as well, so um, nothing really out of the ordinary. I don't think that would surprise anybody either. But we did have a bullish breaker here, so we probably will retest the 2275 marker at a minimum. That's kind of where I'm looking at for the weekly structure. But overall, despite the divergence here, like this is a pretty good structure. This structure from the early 19s to the 21 area should hold. In fact, it probably will hold in the middle of this, about right at 2000. And so that's what I'm looking at. I think the 2000 structure should last. I think that should hold. If it doesn't, I think we have much bigger concerns because if we just spend a year trying to push above this and we reject instantly, then we're probably, I mean, I don't even want to look at it necessarily, but I am thinking probably in the middle of this entire structure, honestly. If we do that, and then we're looking at maybe 1600 or so, I think that is about right. So, with all that as well, we do have something like so. That's probably one reason we rejected here. And so when we have a rejection into this area, and so this could play out different ways, but I'll just analyze it from this area here, from the candle closes. That matches up perfectly. So when we have a divergence at a resistance, that is probably the biggest sign in the world that you should probably sell and think about where we're going to go from there. As far as, and again, you don't have to, like, you can sell and it could still go up. And I think people are misinterpret the nuances of the price action, right? So it just doesn't mean like, do I think Ethereum will go up? Certainly, I really do. But I do think the momentum has gone. So someone asked me yesterday, like, why would I sell knowing that the price is going to continue to go up? Well, it just depends how you view that trade, right? And so it's talking about RSI because one of my rules is I sell at RSI 85. I sell if I buy at RSI 50, and this doesn't always apply, but if I have a trade, I buy while the RSI is 50, not because of it, and then it gets to 85, I sell it. I sell it immediately. Um, Not because it can't go up anymore, but because the momentum has already depleted. 85 is not a sell signal. Being oversold, quote unquote, on RSI is a little more nuanced than people think. And so, but for me, the momentum has peaked. And so, yes, I could get an extra. So let's say I made 50%, I could make an extra 5%, but that extra 5% will probably take just as long as the 50%. And so if I am using leverage, well, I have funding fees to cover, and that may not be worth it to me. Plus, I don't have to stress about it either. So that's kind of how I view that. And so that's pretty much it for weekly. I think other than the disappointment of the divergence, everything is pretty textbook. So let's go ahead and go to the daily. And this is one thing that I was looking at in the Discord is that we we have this structure here, and so this was your resistance structure that we deviated from technically. Doesn't count as a deviation because it happened on the weekly, not on the daily. So it has to happen on the same time frame, in most cases. So with all of this, we also have another liquidity channel right here, and so that's probably where your liquidity block is. But if I want to quantify this as a block, this is where I would put it. And so as you can see, we're kind of dipping into this right now. And so if you want any sort of bullish hopium, you want to close this above. In fact, if we do close above this, I think it actually is worth a long position. Um, and this is what I discussed in Discord. If this again, I work at candle closes. If this closes above, then you can do that. Now, why would I wait till a candle close? Because if I could buy now, then I would be up by the time I close, right? So there's a few reasons for this. One, we don't know if this will close right now. This could go down and then it could go into our stop loss or an area that I don't want it to go. Now, what you could also do if you wanted to limit this, which I don't, or if you wanted to play this before it closes, you could play this and then you could lower your stop perhaps, or if you want to get a position closest to the stop like so, and then do something like this, that's actually really good. That's actually good if you can do that. Now, the reason I don't do that is mainly because of time management. Like that, I don't have time to sit on the charts all the day and look at that. So for what I see this losing a current level. If this can maintain this level, it will wick back up. And so, will I miss out on a couple of percent? Absolutely, I will. But I'm risking that extra 2% because I would rather have a recovery candle than a knife falling candle. See what I'm saying? So there are some instances to where you do want to wait for a bounce or a recovery or something like that because the chances of it continuing to do so will also be higher. So that's kind of what I'm looking at. Roughly around the entry right here, about 2,400. Stop loss roughly just below the mid. That's usually pretty textbook for what I do. Just get rid of that because I ruined it. And so we could target the top of the highs here. I think a 2R right there is decent. I think it's sufficient for a lot of people. It's not sufficient for me. I'm much more likely to do the 2,900 because it's a psychological resistance before 3,000. And so I like that. Gives me a good R value of about 20% run. Looks pretty good. So that's kind of what I'm looking at. Another thing too is I'd wait for one reason also I could wait for this is that we could get a bounce of the 50, which is what I need to kind of look at the momentum increasing a little bit towards my favor. So that's pretty much Ethereum in the weekly daily time frame. A little more textbook. I like it. We don't want to lose this zone. The good news is this is a pretty strong consolidation. The longer the consolidation, typically, the more it's defended. And so I think you can. I don't want to say rest assured. Famous last words, I guess, but I think this should hold. I don't see any reason why it wouldn't, unless and if it doesn't, it might take longer to do, maybe next week or the week after. So I think that's something that is a little more far-sighted for now, especially with this A-ring getting ready to cross. It's a very thin, bearish consolidation. And I say that and it keeps going down, but we'll see if this becomes a cross that could accelerate. If it doesn't accelerate, then we could bounce potentially. But this long is not valid unless this closes above it. So that's Ethereum. Let's go to Solana. All right, on to Solana, and by now you might see a pattern with Bitcoin, Ethereum is about what I might be saying, and some of this I actually said in Twitter about a month ago. So weekly, a little more bearish than the previous ones. I think that's also consistent with altcoins. A lot of these are going to have much more bearish previous days. So if you look at the second candles for most of these days, there's a few that are bullish actually, and then some are more bullish or more bearish than normal. So that's pretty much par for the course. And so whether they're bullish or bearish, they're going to have a stronger reaction. And I think that's by design. I think that's just altcoins kind of doing their thing, and while Bitcoin's kind of cooling off, and we're still above 40. It's not like we're in super big danger anyway. So, um, that's part of that. Now, one thing I mentioned about a month ago is that Solana reached about 86, 87. That's my usually my point where I step out, and so as far as the weekly goes, that's pretty high for Solana. I don't think we've ever actually gotten that high on the weekly. So that is a concern. Now, the good news is we're already reset to 65, so that's pretty decent. And so we have that. So that was the high. This is the current candle, but we had a bearish, not really a Darth Maul, but a bearish downside candle. Had the A-rune bearish consolidation. We're almost about halfway through it, about 67%. RSI is doing good, as I said. And so another thing here I want to look at is you got this structure. And I was really puzzled at this because I thought we would continue to go up to about 136. We didn't do so. And so, I mean, you could try to force this somewhere. I mean, this does fit like from this candle, from this structure, including into here. I don't particularly like to do that because it doesn't, one, I don't know if it really fits anyway. Two, I don't like to force TA into something. But that's just kind of how it is. Sometimes it doesn't work the way, this doesn't have to always hit the mid. It does quite often as it is. So I'm happy with that. Now, we did not have a divergence here. And so that's one thing that we can see is different, despite the fact that it did overextend a little bit. It's not divergence, so that's good. Overall, you have the bullish breaker right here. So I think a lot of people are looking at this zone from this area here all the way to here. I think that's pretty important. I personally am looking at about $78, which is the top of that. That's where I think that it's going to personally bounce. That seems to be the case because it also matches this low here right as well. So $78 is my target to buy again. I have not bought since $19, and so I think this is going to hopefully bounce at that point. But I don't want to say that. I don't want to say things like hope or things like that. Like I'm looking at TA to kind of give these conclusions, and then the probability should be there. So that's what I see on the weekly. On the daily, you kind of see where this consolidation impulse, that's kind of that area where we should be retesting that. And I think that's pretty crystal clear. So I was looking at this yesterday, the small consolidation period. We actually broke above and had a cross. So that's part of your down move to today. So the good news is if this has no follow through, then this should actually be a bounce point. And so that kind of relays to me that we will get this $78 potentially, and we bounce from that. So that's kind of what I'm looking for. Um, Other than that, that's pretty simple. Solana is giving us a lot of simple things in this regard. And we did have a trend line here, and as you know, like based off the slope, it should break down, and that seems like that has been the case. So until then, I think I'm pretty sold on that. And we could set up a position here, maybe like 79, target at the lows here. 15% is pretty significant, and so you just target the high again. And so that looks good. That's a good conservative thing. Like I like to stay with like basic. Um, I don't like dealing with super aggressive trade. A lot of people do, and that's completely fine. But I try to play it a little bit safe here, and that's kind of I see 15%. stop loss at 3.7R on a 60% rally, basically. So, and again, that might take a little longer than you want. So that's why I tend to do spot, things like that. RSI has failed so far. That needs to recover as well, but it's looking good. And so that's the thing. You got a weekly at like a 65, and you got the daily here at the 42. So if this goes up to 50, that's a good chance that we could probably swing up a little bit, hit that 50 on the weekly as well, from the down target from this, and be on our way. So we'll see how that goes. But that's Solana. Very quick thing with that overall. And so we'll do a little summary in the video. So overall, I mean, I didn't intend to have a theme, but I guess, I started to ramble a little bit about how we should monitor our current perceptions on what bullish price action means, what bearish price action means. I've said this before in other videos, but I guess this gets a little more real estate for this video because I think a lot of people use that too critically, use that too seriously, interpret that wrongly. So when you get things like ETF, like buy the news, sell the news, well, does that mean sell the news now? Does that mean buy the news now? What does that mean? Or when it comes out? There's a lot of nuance to that, and I think that's one reason why you may be getting things more wrong than you should be. And that's why I go back to what I said earlier is the biggest problem is human. The biggest element that causes the most problems in the trading game is the human element. But that doesn't mean that doesn't have to be a bad thing. You don't have to take that as an insult, because the best part of that is being able to enjoy that as a human being as well. And so that's the thing. A lot of this is, analysis or it's quantified. It's emotionless, and we as humans have natural emotions that are good to have. You should not be like, I don't think you should be trading emotionally. I think that's very wrong most of the time. But I don't want you to suppress your emotions as a human being either, because those are meant to be used for other things like life events. And so use your emotions to use the money that you make. And so make that money, be emotionless as much as it makes sense about your trading, and then once you make that money, use your profits to go enjoy life and use your emotions while you enjoy that life. See what I'm saying? So use them in the right way, because otherwise it's destructive for pretty much everybody, including your portfolio. So let me know what you think. Happy to discuss this. Links in the description for everything I discussed. Posting this on YouTube, and I will see you next time. Have a good day.